Markets news now. Asian markets were mixed today after Wall Street edged lower amid fears that higher interest rates will chill global economic growth. Federal Reserve Chair Jerome Powell, talking to Congress members yesterday, said while the U.S. Central Bank doesn't need to provoke a recession, one is a possibility due to the rate hike to quell inflation that's running at 4-decade highs. Shanghai and Hong Kong advanced while Tokyo and Seoul declined. Asian markets slumped as close as Nikkei dropped 0.7% to 24,110, while the Hang Seng edged down to 0.1% to 27,091. Shanghai Composite remains closed for a public holiday. Wall Street ended flat in choppy trading after Reserve Bank Federal Reserve Chair Jerome Powell spoke to the central bank's aim to bring down inflation. Stocks were lower after Powell's testimony before Senate committee. The S&P 500 lost 0.1% to the end at 3,759 points. The Nasdaq Composite fell to 0.1 to 11,053, and the Dow Jones Industrial Average lost 47 points to 30,483. Viv Govender joins me today for our market update. Viv, thank you so much. Let's start at home first. Let's talk about the CPI figures that we saw yesterday coming in higher than what most analysts had expected, fueled by food and transport. Can we expect things to get worse, particularly in the June print, Viv?
Almost certainly. We see food prices remaining quite high. We have seen a bit of a pullback with regards to some oil prices recently, but they still remain, quite high. Over $110 a barrel for Brent is a significantly high price. Also remember that the government's going to be putting back that tax that it didn't, put back in the last period. So we are going to be seeing basically that, I think around 50 added onto the fuel price effectively coming through, even if things remain constant as they are. Going forward from here, I think food prices are a big issue, especially in a place like Africa and in certain parts of Asia as well. We already have seen places like, for instance, Sri Lanka under great deal of pressure because of food, other factors as well, but food is becoming a problem there. We've seen, a bit of flares up in places like India, which, has put an export ban on wheat. Indonesia has an export ban on palm oil. So we are seeing food prices basically as a real pressure coming through. And you saw that in the numbers as well. For instance, services inflation was like 3%. Goods inflation was like 9%. So that shows that there's a bit of an important inflation coming to this market at the moment.
Right. Powell's comments were largely anticipated last night on how the U.S. will tame inflation, and those have obviously sparked recessionary fears. What do you make of that and how that will spill over to the rest of the world and maybe here at home as well?
Look, firstly, people must understand that when the Reserve Bank of any country raises interest rates, their aim is to slow economic growth. That is why they are raising interest rates. You raise interest rates to fight inflation. The way you fight inflation is the mechanism is high interest rates make it harder to borrow, harder to spend in the economy, reducing economic growth, reducing employment as well. This reduces demand and brings down inflation to a certain extent. So this is something you have to understand when you have the Federal Reserve or the Reserve Bank of Africa or the Bank of England or the Bank of Japan trying to cut inflation. They are usually going to do it, or primarily going to do it, to try via basically reducing the amount of growth that a country is experiencing. The problem is that, the first quarter of growth in the US wasn't great, it was negative. And they had inflation numbers, in excess of 8% in the last count. So they don't really have really strong growth that's driving this. They have other factors driving inflation at the moment. And if you're trying to reduce, inflation in a really weak, growth environment, you are going to find it very difficult not to push yourself into a negative, sphere. And I think that is what he mentioned. The fact that the factor is a soft landing where he's able to reduce inflation without going into negative growth for the U.S. Is going to be very challenging, to quote Chairman Powell.
Yeah. Viv, just the term recession has always been one that makes everyone jittery when you remember the global economic crisis that we faced in 2008, and everyone thinks what's going to happen now. Should now the recession happen, particularly in the U.S., what kind of picture can we see spilling over to developing economies such as ours?
Well, if the U.S. goes into recession, generally, say if the U.S. sneezes, the world catches a cold. It's slightly less true right now, but still, reasonably, accurate. If the US goes into recession, us surviving a recession would be kind of a feat. Also, the reason the US may be going into recession is because it's raising interest rates. It raises interest rates, and if we don't, sorry, it might be load shedding, I think, apologies. So if we are raising interest rates as well, we're also going to have to expect lower growth rates in South Africa. And if we don't raise interest rates, what's going to happen then is the currency is going to weaken. If the US is raising interest rates and we are not raising, at least by as much, our currency will weaken, and then we'll have inflation issues as well, forcing us to raise interest rates. So it's a bit of a catch-22. The US raising interest rates causes a downturn. We're going to have to raise interest rates as well, and it's also going to cause a downturn in South Africa. And we are also not in a very strong growth situation at the moment.
Yeah, no, we're certainly not. And I can see that you have a threat of load shedding where you are the realities of living in South Africa, I suppose. So now next month, when our MPC meets in July, those 50 basis points that they increased with were quite hefty, and quite hard on the consumer. Do you think that they're likely to remain flat, or can we expect another increase in interest rates? It's going to be quite hard for consumers, I must say.
Like I said, unfortunately, because the US is being aggressive, we've got to be aggressive as well with raising rates. If we don't raise rates, you look at the Bank of Japan, they have not raised rates when the US was raising. The yen has weakened significantly, and I think in the last year, the yen is down 30% versus the US dollar. We saw a slight weakening in the pound as well, when they only raised by a quarter, when the US raised by 0.75. So we are going to be hard-pressed not to at least follow what the US is doing or get close to it, without basically causing the rand to weaken. If the rand weakens, that means the petrol price goes up, it means the cost of goods goes up, and because we have a lot of international parity pricing in South Africa, the cost of food will go up. It'll cause a whole bunch of trouble for the country, and may force us, because inflation is going to be out of bounds anyway again, to raise interest rates if we get more. So I think it's going to be very likely that we're going to have to follow the US or be very close to it. I don't see us standing pat while the US is raising.
It's really going to be very hard, as you say. Viv Govender from Rand Suez, our market analyst for today. Thank you so much. Always a pleasure speaking to you.